What does your future look like on inflation? So, and it's Brandon here. We have just a quick little experiment today, a quick little to start the week, quick little fun project to work on yourself and just mess around with. But there's many different inflation calculators out there you can go to. This one is smartasset.com. But there's many out there you can go Google and just check out and see. This is, again, why we talk about wealth is your freedom. Wealth is your time and energy. It's owning your own property. It's owning your own time and energy. And it really is freedom. Money, like we say all the time, money is a tool. Gold, silver, Bitcoin, knives, firearms, cars, whatever it is. Like, these are all tools. They can be used for good things. They can be used for bad things. It just depends on the person behind the wheel and who's operating said tool. So money is one of the greatest facilitators of the market, we'll say. It's the ability to store up capital, store up your time and energy, and then allocate properly. In an inflationary fiat monetary system like we have now, price discovery is destroyed. We don't have capitalism. We don't have free markets. It's constantly being manipulated by the Federal Reserve, by the Federal Open Market Committee, by government, and it's constantly being shifted and moved. The goalposts are constantly moving, so no one has any idea what's going on. The average person can't save. The average retiree can't save. The average business owner can't plan a month ahead, a couple months ahead, because they don't know what their debt, their carrying costs are going to be. They have no idea. No one has any idea how to predict what's going to happen, where the market's going to go. So what do? That's why I talk about Bitcoin all the time. I have gone through the hundreds and hundreds and probably thousands of hours of research at this point into Bitcoin, doing the same amount of study for gold and silver over the last 10 years, and studying. I probably don't have as much in fiat. However, we've all grown up in a fiat system, in the dollar fiat system, where it's just government currency that's literally backed by nothing. So it's literally based off of the confidence of everyone just agreeing that this is the system. So the fiat currencies are based off of everyone just agreeing, looking at each other like the Spider-Man meme, aiming at each other and saying, "Hey, you're not gonna leave the network, are you? You're not gonna leave." Where Bitcoin, gold, silver, those are actual assets. They're actual tangible assets, physical assets, and energy that can't be faked. You can't print that up. So the theft, that is the printing of currency, the counterfeiting of the currency, is stealing all the time and energy away from the productive class, like the Matrix, like the pods, like you see. That movie was about real life, about the fiat currency system, the fiat monetary system, where people are just in pods, human beings, used as just worker bees, and they're extracted of their time and energy. And that's the world we live in. It's an invisible prison we live in. So in saying that, we want to save in a deflationary asset where we can use our time and energy, store it up in a vessel, in a container, finite container that grows in value over time, and then we can allocate that capital where we see fit. But then we can get off that hamster wheel, spend time doing our passions, our hobbies, spend time with our loved ones, etc. So this is something that everyone should really, really look into and dive into. Where does $1 million get you? 50 years from now, at just a 2% inflation rate. To have $1 million now, you would have to have 2.7 million in 50 years from now to be equal of 1 million today. And you can go all over the place, to find, what was it 50 years ago? That's why Grandpa's house cost $5,000. Now it costs $500,000. It's the same process, right? But who really thinks we're going to be at just 2% inflation going forward? When we've done all these videos, we've shown you the debt spiral, and how it's going to be probably 100 trillion debt. We're at 31.5 trillion now. Probably going to be 100 trillion in the next decade or two, next couple of decades. So well before 2073. So, losing 70, 80% of the purchasing power minimum just through currency printing and the debt we're going to have easily. Do we think it's really going to take till 50 years, till 2073 for this to happen? No. And do we think it's going to be 2% because of that? No, of course not. It's going to be financial repression, the model that we've been told through the IMF, Ben Bernanke, people in Europe, people here in America. So it's probably going to be more like 5, 10% to 15%. We know right now current inflation is 15%. If we go by how we measured it, and we've showed this many times 40 years ago, and they kept stripping things out of the basket. So this is where it's really powerful. We're not going to go to 10%. We're not going to go to 5%. But let's do what $1 million. If you want $1 million right now, where there's a fair amount of people that could probably live off $1 million for a while. If you're 60, 70, 80 years old, you could live off $1 million. Even right now, you could probably live off for a little while, make it work, and you'd be fine. You'd be good. You could live a modest lifestyle and make it work. Let's go to 5 though. So what does 5 get you? If it's in the next 50 years at a 5% inflation rate, just 5, you would need $11.5 million. So in the future, you'll have to find $11.5 million just to have the purchasing power of $1 million today. So if you want just $1 million, but if you want $2 million and you want to live, make sure you're comfortable, maybe have something to pass down to your kids, you're going to need to find, what is that? Basically $23 million, $24 million, just to have $2 million in today's purchasing dollars, today's purchasing power, in order to live comfortably, do what you want to do, maybe give some to heirs once you're gone. $22, $23, $24 million. Now, let's see if we just do $1 million. Again, if we want just $1 million, and it's 10% on average over the next handful of decades, which we know if the monetary system does make it that long, which I doubt it will, but if it did, and it's probably more along the lines of 8%, 10%, 12%, 14%, we're going to say 10% just because you're looking at $117 million. $117 million. So if you needed $2 million, if you wanted $2 million to live comfortably, maybe pass them down to your heirs, do what you want to do, live for another 10, 20, 30 years after you retire at 60, 62, well, at 10%, on average, that could go down to 6. 1 year could be 14 the next year. Think about that. At $2 million, you need double this. You'd be at, $234 million. You need to find $234 million just to have the purchasing power of $2 million today. This is 50 years from now because of government inflation at just a 10% rate on average year over year. So think about that. We just did videos on Argentina having a 99% inflation rate just over the last year. So think about where we're headed and what's happening. So you have a fiat currency, a peso, a bolivar, a yen, a dollar, and you have that. But it's constantly being printed or debased or typed digits in the computer. So debased, meaning the value is less and less and less. You need to find more of those dollars now because they're worth less to go buy that same car, that same carton of eggs, that same house. Where Bitcoin is exactly opposite. There's actually less and less and less of it, meaning the value of it, the rarity is going up. So the value of it is going up. The purchasing power is going up. So if you're holding something that's rare like a Mona Lisa, then the purchasing power is going up because there's less and less and less. It's rarer and rarer, meaning it can buy you more things. It can buy you a house today, and then one Bitcoin will buy a city block of residential real estate 10 years from now, and then 10 years after that, it'll buy you a whole city block of commercial real estate because the purchasing power keeps going up in value. As you can see here, if you hold fiat dollars, this is what your life looks like going forward. If you want at 10% interest, or a 10% inflation rate, and you want $1 million in 50 years from now. So if you're a young kid, if you're a 20-year-old, 15, 20-year-old, 25-year-old, and you want in 50 years when you're retiring, quote unquote, but we're on a 10% average inflation, which is fairly modest compared to a lot of countries that's going on, well, you're welcome. You have to find $100 million. So this is the insidiousness of inflation. The stealth tax, the theft of your time and energy. This is why we must make the finite trade of finite time for finite asset. Bitcoin for time, time is Bitcoin, right? Where saving dollars on your balance sheet is not an asset. It's a liability. It's losing its value every single day, losing its purchasing power. So it should not be an asset. Savers are losers. Should not be looked at as an asset. It should be a liability. You have a liability on your balance sheet. That's okay for a time, for 5 months, 10 months, 20 months, whatever it might be. But you have to do something with that. You got to put it in assets and hedge that. And Bitcoin's been the thing for 14 years. As it decreases in supply, it gets more valuable. As you can see, the purchasing power goes up because the number of dollars you need to find for one Bitcoin continually rises. They're diametrically opposed from each other. So I hope that makes sense. Let me know in the comments if that makes sense. This is so clear cut. It's just clear as day as to what's going on. And the option is there. The Bitcoin life raft, moving away from the sinking Titanic, the legacy financial inflationary monetary system is just slipping below the waves over the last handful of decades. And the Bitcoin life raft is just going out to sea, building itself and watching this disaster slip under the waves. So let me know if you got something out of this, what your thoughts are, and what you're doing to remove yourself from that. And please, again, if you want the written version of a lot of what we do here, by the way, please go check out in the description the blog we have. And it's the written version, 2, 3, 4, 5 minute articles of the written version. So if you can't watch what's going on here or listen a lot of times, we have the written version a handful of times a week about my thoughts on what's going on, how I'm building my portfolio and what we're doing, and my thoughts on a lot of what we do here on YouTube as well. So please go check that out. Please share this with someone you think might get something out of this, please, because the algorithm doesn't like truth, doesn't like reality, and it's not going to spread it. We have to be the community that spreads truth and reality, and I hope 10,000 more people this week start doing what we are doing here so we can start overwhelming the system. I hope you start doing this and putting your thoughts to paper. blogs, YouTube, etc. I thank you for coming to my TED Talk. Appreciate your time and energy. It's the most important asset we have. Time is Bitcoin. Bitcoin is time. And I look forward to seeing you on the next one.